You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions are David Shapiro from Sasfin Securities and Ricus Reeders from PSG Hole in Ruimsig. This is not a live show tonight. We've had a few gremlins with our technical side of things. So please send questions though for tomorrow night's show and we'll pick those up. Same text number as always, SMS 41392 or email stockwatch@bdtv.co.za. David, Ricus, good evening to you and Happy New Year. I know Larry David says the statute of limitations on New Year's greetings expires on the 7th of January, but I don't care. And David, I'm going to start with you. Towards the end of last year, the market horses were unleashed and they were galloping along the sunlit uplands of a interest rate cut nirvana, and then it all seems to have fallen and crashed in a heap in the start of this year. And you've had some inflation numbers out from the UK and the EU today that seem to have sent shockwaves through the market.
Yeah, but it's temporary. You know, it is going to be a quarter of or a half year of rate reduction. It's going to happen. I know the US sales numbers came out, the retail sales, which are very strong. Also, other data is pointing towards a very strong US economy. All it's going to do is delay it by maybe one session or not. We are going to get rates. The market is still very positive and still building in a rate reduction as early as March. So I think just get through it. You know, we've had such a good run towards the end. What's more worrying though is our local market. I think that's starting to show signs of strain. But the global market, certainly the US, I don't think there's anything to worry about.
Ricus, I mean, at the time of recording the show this afternoon, so just before the close, actually, we were down about 1.7% on the all-share index, and the rand had blown out against all currencies today. Are we alone in having money sucked out of our capital and equity markets, or is there a bit of an emerging markets pullback at the moment?
I was reading through JP Morgan's sort of yearly outlook, and they are positive emerging markets with one exception, and that's South Africa. Your problem is we don't have growth. And if you don't have growth, the only thing that remains is risk. And that's what we are seeing, I think, to a very large extent. So, thank heavens, we're not China, but we are certainly not the pick of the bunch at the moment. And people are taking their money elsewhere, and we are getting sold out. Specifically, the SA Inc. shares. Resources is another story. You know, heaven knows when that, in the short term, what oscillations are going to affect both metals prices and, of course, our mining shares.
If you talk about the mining shares, the gold shares actually came under quite a lot of pressure today. And I suppose gold is a curious one this year. Last year, of course, it had a fantastic year. And a viewer actually sent a question a bit earlier saying, is 2024 going to be the year gold outperforms? Well, I think last year might have been the year gold outperforms, or certainly the gold stocks on the JSE. The questions on that, do you think he's missed the bus? Or really, is it anyone's guess as to what it does this year, David?
It doesn't look good. And although there's so much talk about the dollar weakening, rates coming down, gold going up, it never happens. That's why I'm saying just be very, very cautious of gold. It always slaps you in the face somewhere along the line. The more optimistic you get, the more disappointed you'll be. So I remain cautious. I think likewise, platinum is not showing any kind of form as well. I don't know why they associate platinum with gold. Platinum has got a lot more industrial uses, and I think the reason it's coming down is because of industrial issues. Palladium's come all the way back. So it's very, very hard to read. I think the commodity markets, you can see even oil. So I'm with Ricus's in the sense that, this is difficult to know where to position yourself. And he calls it, he says risk. And I think it's very risky to take a decision if you haven't thought it out or you don't know where it's going. Then it just becomes a wild gamble. So if you can't see anything clear, just stay away from it. And I think that's what we're seeing in commodities. And likewise as Ricus says, SA Inc. is looking very, very vulnerable.
Yeah. And SA gold shares. So I don't know if the viewer is specifically referring to the gold price, which of course had a good end of year and a very good start to the year. It's come down a little bit, but I mean, if it does what it did last year, and you can see from the chart there, it sort of spiked up in April and then it kind of dribbled all the way down to its lows in October, and then had a phenomenal run until to where we are now. Theoretically, Ricus, the gold price where it is and the rand where it is means a very high rand gold price for the South African producers, and yet you saw their shares get sold off today. So would you differentiate between the South African gold shares and the gold price, or do you think you wouldn't be prepared to call either?
Yeah, let's start with the gold price, and I agree with David. The theoretical support for gold is there if we assume a less strong dollar and yields coming down, because by its very nature that's good for gold, which is a non-yielding asset and gets priced in dollar. So there's support for the price not plunging to like it has in the past, but also, as Dave said, if thinking about predicting it is fraught with danger, because it's really one of the most difficult things to figure out. So, but just to put a line under it, there is supportive things for the gold price. As far as gold miners are concerned, I think you've got to differentiate between those mining in South Africa and the associated problem as far as labour and costs are concerned, and those who have their operations offshore in more stable environments. So if you want to gamble, do the South African stuff, because it's obviously going to be more volatile. If you think you've got the gold price right, and you think the rand will probably be weaker, then you might benefit, or it might be less risky to go for companies that dig their holes outside of our borders.
Like Endeavour Mining, for example, which grabbed all the headlines at the start of this year. It's not, I don't think, a share known to very many South Africans, but it's got a whole bunch of South Africans or individuals linked to the South African gold mining sector now on the board, including Ian Cockrell, who was named the CEO, last week or so. Okay, I don't know if you would be prepared to call the rand this year, or if that's, actually, I know it's a fool's game, but if, on a balance of probabilities, would you say that we're going to start the year with a weaker rand than now, or do you think there might be a bit of a reprieve?
I'm not a technical analyst, but I love to talk to technicians, and I love their opinion. And the thing that bothered me, I was in the 17 rand camp. This is going to be a great year. Markets are going to go a lot higher. They're going to soar. AI, you name all the themes. Therefore, if that's going to happen, dollar's going to get weaker, rates come down, rand 17, 16.50. That's me. So we're at 19 at the moment, and if anything, we look like we're heading to 20. So and 24 against the pound. So they're obviously big worries in our local market. The dollar has remained strong, but I think there's also deep concerns about South Africa. As much as we talk our game up and believe that things are going to change here, I think a lot of the political positioning that we've taken is going to cost us down the line. Whether we like it or not, I think that people are turning their backs on us, and it's a worry. So, at the moment, it looks like the rand's in a very, very weak kind of area and weakening as it goes.
Yeah. Well, you're lucky you've got a technician on the show tonight, or a man at least who dabbles in the technicals. So, Ricus, peering into the dark arts of your charts, what would you suggest? Where do you suggest we're going in the short term? I guess the longer term is a bit harder to call.
Well, looking at a graph, I tried to keep it as simple as possible. And basically, for about 4.5 months now, we've been oscillating between about 18 Rand 50 and 20 Rand. So it's still well within that channel. But unfortunately, if you step back a little bit and sort of take a look at weekly and monthly charts, it's fairly obvious that the Rand is weakening and has been consistently weakening. So therefore, staying with that trend, at some stage it will break out, because it can't go sideways forever. and taking it at past history and also considering the socioeconomic factors affecting us, it will probably go weaker and at some stage will break above 20 and goodness knows, going to 21, 22, where do you want to go? The one thing that might help us is a very strong resource markets, which obviously benefit miners, and that will strengthen the rand. But if resources just piddle along and considering where we are politically, that's the second factor. It points to weakness.
Yeah. If you were doing a little bit of housekeeping on your stock market portfolios at the start of the year, which I think you probably should, would you look at this and say, oh my God, I'm not taking any money offshore because it's just too prohibitively expensive to do so, or I better take offshore because if I don't, the rand's going to go out to 25 to the dollar, and here I am going to be left sitting with the equivalent of a $1 trillion Zimbabwe note.
I've never let the rand influence me. I've always looked at opportunities, and I've liked to look at the underlying businesses. I like to look at stocks, and if I like the look at the stock, I buy it. But if you're going to play the rand market, you're going to come off second best. You're never going to win that game. And as we've seen, and as Ricus is pointing out, and I think as we've seen over the last decade or so, this is a weakening economy. Structurally, we are losing ground. And I looked at, I was listening to Lesetja in Davos. I like him very much. I think that if only we could have a cabinet made of Lesetjas and even Enoch and Goodanywaga.
That's okay.
He's okay. You know what I mean? I think for an ANC economist, I was very worried about him. But, what I'm getting at is despite that, despite what they say about inflation, I think it's still in the 5% area as other countries are coming down, which means we're going to weaken. We're going to continue to weaken. We haven't got on top of that. So even if you use the inflation differential and ignore the political issues, and we are going to continue along that trend.
Yeah.
So I just be careful. Take your money out. I think that the opportunities, and I'm saying look at the opportunities. They're far better places to put your money in businesses that are going to grow than here. When we recover, if ever, then you can bring it back. But, don't be silly.
Yeah. Okay. And a viewer sent a question a couple of days ago saying, after a dreadful start of the year in 2023, my JSE stocks gained 20% and my US stocks 30% by year end. Were these fair returns on my investments? Ricus, I would say that sounds pretty damn fair to me. It's inflation and plus some. What do you think?
That's very fair. That's pretty good. I mean, a lot of the US gains were done from the October lows, where we had an enormous rally, both in tech and in the broader market. I think the Russell went up about 20% in that, just in that last 2.5 months. Versus, as far as local is concerned, JSE did about 5%, which is almost lost again in the first 3 weeks. But yeah, so pretty good returns on both.
David, the JSE, okay, so I don't mean to sound negative on the South African market, because goodness knows we would love to see economic growth in South Africa and a booming stock market. It would just, have such a great multiplier effect. But and presumably in rand terms, this chap's stocks were up 20%. Is that enough? Because if you look at it in dollar terms, it doesn't look nearly as good. Is that still fair? Especially if a lot of your assets and your life is based in South Africa.
It's a wonderful return. I think considering that the JSE did nothing, if you make 20%, you've done really well. Even taking into consideration the drop in the rand. So there's been a real return that you've made in dollars, even if you wanted to convert it to dollars. In all probability, if it was not in small caps or taking some punts and some turnaround, I think a lot of the ETFs, whether it was a NASDAQ ETF or any of those, gave you plus 30%. I think the NASDAQ over the last year gave you over 40% in Rand. So, there are those opportunities on the JSE where you can actually hedge against, our poor markets. I'm doing that, but that's where my focus is at the moment. I'm far happier in some of those ETFs if I'm forced to stay here than some of the local stocks, which I'm still battling with. Really battling to find things to get my teeth into that even takes into consideration some of the banks and everything else that people are talking about. So, that's a pretty good return.
I mean, just on a theoretical basis, what is a fair return? Is a fair return what you get relative to what the overall market gets? Is it relative to the high flyers of the market, or is it inflation plus a couple of percent so that it's a real return? Because you can see from that kind of question that you're not sure if 20% is good. I mean, whereas our collective reaction was 20% is very damn good indeed.
Ricus can answer. I'll give mine afterwards.
Okay, Ricus, what do you think?
Okay, we're going to talk theories. Let's talk theory. I think if you wonder whether your return is good enough, you've missed out an elemental piece of your whole investment decision. And that elemental piece is how much do I need, or how much would I like to have? And once you settle that and say, okay, in my view, I think a 10% return would be good for this year. Not that markets work in years, but for whatever period. Then invest and track and monitor and see whether you are getting it. So you won't be surprised by what you get in the end and have to ask yourself the question, is it good or not? You must make the decision beforehand to say, this is what I need, this is what I would like, and then invest accordingly. That's the theory.
Practice is quite different, though, often. People
usually measure it against the long bond rate. And I say, what is a long bond rate? But it's open to a lot of discussion, because especially if you're an individual and you're getting 10, 11% on government bonds, you're going to pay away tax. So you end up with 5 or 6%, and inflation, it's 5 or 6%. So you have 1% real. So I think in South Africa, you're going to seek a lot higher return than that. So anything above that tax-free rate, I think, is a pretty good return. So 20 gives you a big margin of safety against the long rates and so on. This is, there's so many theories about what a decent return is. I like to measure it in, did I get richer? In other words, did I maintain my purchasing power? Or
improve it.
Yeah, can I still, can I still go overseas and buy a cup of coffee, or do I have to, or do I have to use a tea bag twice or 3 times or something like that? So, whether you're getting poorer or not. And I like to measure returns in dollars. And there again, we measure it against the inflation rate there and the bond rate, etc. Okay. So I always say 6 or 7% in dollars is pretty good.
Yeah. Okay. Thank you. For a little bit of theory. Now, one of the stock markets has been under quite a lot of pressure, certainly from withdrawals, has been the Chinese stock market. And a viewer sent a question on JD.com, and he says, what's wrong with JD.com? Ricus, any insight as to what indeed is wrong there?
China is wrong with JD.com.
Yeah, that's a bit of a problem.
And I stole that from one of my Chinese clients, where I asked him these questions, and he just went like, China, So 2023 was supposed to be the year of China's survival after COVID. It hasn't been, and nothing has changed politically or their haphazard way of trying to stimulate the economy in that year. So I think 2024 is going to be more of the same. And like with South Africa, there's possibly individual companies and individual businesses that, despite what is happening in the broader context, will give you a good return. But in general, the Chinese economy and therefore the stock market is in trouble. And not only from Xi Jinping himself, but obviously also the pressure that the Americans are putting on their tech sector.
Yeah. I mean, the JD.com share price graph is horrible. It's essentially a third of where it started last year. And you can see at the start of last year, there was a run up. And as Ricus said, on the expectation that this was going to be China's year, it was going to have this post-COVID sort of flourishing. David?
There's a worry there, Juliet, and it's a discussion. We're so attached to Naspers and process. We've got our models which tell us exactly what it's worth, and we continue to believe that all the different businesses other than Tencent are going to start contributing. But if you look at Tencent, it looks awful. It's not JD.com, and it's not Baidu, and it's not any of the other companies that have come under pressure, but it's still under pressure. And I'm concerned about the trend. There are those who believe this is the bottom, but I think there's a lot more work to do. And so I give a warning on both Naspers and Process. I know we've had it for a long time, and there's lots of profits still built in from the old days and that, but be careful. It's not looking, and that's a big drag on our market as well. So by choice, I'd rather be in the US tech stocks than China. And Ricus is right. It's China's battling. Yeah. It's battling to get any kind of momentum in its economy.
Yeah. Well, I suppose like us, they have some fairly obstacle-strewn political issues. Well, an obstacle course of politicians. And just before I get to your stock picks, there's a question on EOH, and the viewer says. Stephen von Koller resigned as CEO from EOH. His last day is in March 2024. Will there be a further downfall in the share price? My average price in was R3.37 with the current levels of R1.35. If I hold another 4 years, could it pass my R3.30 average price? I mean, that's impossible to call. But would either of you take a flyer on EOH and its ability to attract capital and get itself going again?
We love to catch falling knives. You always find these punters. They love it. They love to have a go at something that's fallen in the hole. Leave them alone. If there's troubles, just leave it alone. Go find something where there are no troubles. So I just stay away from it. I think that it's got too much to work through. The fact that Van Koller resigned, you must take as a big warning. He's totally worn out, and so be very nervous of it.
Well, I suppose, yeah. I mean, he went in there and turned it around. There was a 5-year period, and yes, I'm sure it was absolutely very wearying. But Ricus, David says leave it alone. But if you're in it and you've averaged in at levels far above where you are now, what do? Do you cut your losses, or just say, okay, well, I could stick with this for the next while? What would you do?
Well, it's sort of. Okay, if it's a small enough part of his total wealth, maybe. But I don't think that EOH is your typical recovery stock at the moment, where there's lots wrong that's going to change and then the price responds to it. I think most of the troubles in that business has been sorted. The question is what remains good enough for you to expect a decent return on your investment? And I don't think that answer is in yet. So, is it really good enough to all of a sudden turn into a high growth stock? I don't think so. But we'll know soon enough. Last year, this time, they had a sort of a quarterly update, so maybe they do again, and we will know a little bit more.
Yeah.
In the next few days.
Julieta, it's ego. People don't like to sell at a loss because they think, nah, I never do things wrong. I'm not going to let this get. In the meantime, you just end up losing more and more money. Yeah. You made a wrong decision. Basically, realize it. Find somewhere else to go.
Or look at it as an assessed tax loss, and then you could offset it and give it to the tax man and feel a bit better about life. Okay, last minutes between the two of you. So quite quickly, your stock picks. David, sticking with you.
I'm going for Airbus. I think the amount of it's a new one. I've always loved it. I've had it a long time, but I think with Boeing under a bit of pressure and travel just taking off, you can't believe how many people are traveling. I think and needing to renew your fleet as well. Just Airbus and Safran, worth looking at.
Okay. And Ricus, how about you?
Bitcorp, I think their results a month or so ago, brilliant. I mean, earnings above inflation. I like their diversity. China is a problem, but that's only one part of their business. I think Europe or European markets might surprise us towards the end of the year, because I think they're probably going to cut sooner or sooner than people expected, if you just take a look at what German GDP numbers were. And that's going to be good for European stocks, and let's face it, they've been hammered, and Bitcorp is part of that, and it's a very good company in a depressed market. So if the market turns, Bitcorp should benefit from just the momentum in those markets.
Yeah, let's hope so. Well, 2 European companies you've picked there, Airbus and Bitcorp. Well, South African European. Okay, we shall leave it there. Ricus, David, thanks very much for joining us this afternoon, evening. David Shapiro is from Sasfin Securities. Ricus Reeders is from PSG Hole in Ruimsig. And coming up, the close. Stay with us.